And welcome back to our Market Day Report. As Christina mentioned, one last look at this grain and livestock trade on a crop report day, supply-demand update. We go to Chicago. Todd Horwitz with us earlier today, talking to Marlon Bowling, and now back with us doing double duty today. And we're glad to have you. Yesterday you said, Mark, let's just get past this report, and we can move on to other things. You still feel that way?
As I said yesterday, and the report really was meaningless here. It didn't really tell. We already knew that information was basically already priced into the market. The markets are really just under pressure. Commercials are keeping the pressure on the markets. There's a lot of reasons to believe that they're going to try to push them lower, but I think they've actually failed. And I think we're starting to see little bits of action that are trying to push them a little higher. And one of these days, we're going to escape through it, and then you're going to get this little bit of a short covering burst. Today is not that bad, I don't think. But again, reports didn't tell us a lot. We still have basically under pressure, and we're still hovering every day. We're right around that unchanged rate. If we just drew a circle around 358 to 362 in corn, that's where we'd be for the last, how many weeks. And that's really what we're seeing here. I don't see a lot to do here. I'm still want to be in. I am still long, but I'm not going to bring new money in until we can get out of this range. And I wouldn't even mind to see a quick break to the downside and buy there. But I do believe that we will end up higher. Don't forget, we've got a long time now. Now that we're focused on planning and getting it in the ground, there's a long time between now and when it comes out. A lot of stuff can happen between now and then, and I look for some good upside surprises for us.
Very good. All right, now looking at, so we're near unchanged, up 3 quarters, down 3 quarters in the corn trade. Want to get your thoughts, though, Todd. That being said, you said the report didn't show us much. Marlon and I, looking at those world numbers, every one of them, corn, beans, and wheat, were not only lower than expected, they were below any range that we saw out there. How do you say that doesn't really mean that much to the market?
Well, now again, see, here you're looking at it from your perspective, which is great, but the guys that run the money through the market had already priced that part in, because that's why we didn't see much movement off of that, because that was stuff that could be accounted for through all the technology today, through all of the reports that come out. By the time they actually put the real numbers out, I always figure I'm about the 1 millionth person to hear what's actually going on in these reports. And that's, you're seeing it because price is king. If price tells you, price is telling you that it didn't really matter, and that's what we're seeing here. We saw basically virtually no reaction when the numbers came out. We're seeing less of it right now.
All right. So if you're a producer, you still your strategy has been, if you can hold on, hold on.
I'm a firm believer in holding. I believe that there's going to be a bigger demand. I believe that eventually, hopefully sooner than later, but that the central banks in Europe and the Federal Reserve here will finally get their act together, let markets really trade themselves, and let asset classes really price themselves. And then when you get that going, I think we'll get to a real market. Right now, what you have is a market that we have to follow too many outside sources versus just what we have. We know that demand has to grow. I mean, people are going to eat. Unless we're going to stop eating, then we don't have to worry about it. But we know that there's more people, there's going to be more eating, and it's going to continue to pull. So eventually, when we get rid of all these guys that are trying to financially engineer the markets, that will take care of our grain and markets and allow us to, I think, start to move in a real direction.
Very good. We're a little long here, but I want to ask you one more question. On the other side, if you're a user of grain, whatever it might be, livestock or soybean meal, what would be a different strategy than a producer maybe wanting or not to sell?
Well, I think you right now, you want to look to probably hedge to the upside now. You can hedge down and you can hedge up. I think if you're going to be using a lot of grain, I think you should start protecting this price right here. And you can create a synthetic model that will allow you to say, hey, I'm in corn at 358 or, these corn at 380. I'm in. I'm locked. My prices are locked in. I know no matter how much I use, that's what I'm going to pay for it. And if you know you can make money at those numbers, then those where you should be locking in. That's one of the secrets to Southwest Airlines versus all the other airlines back in the day. Now the other airlines have figured out that they just hedge to crude oil and they know what their cost is going to be. Then you can do the rest of your business once you know what your initial cost is without having to be worried about markets going crazy. If you lock it in now, you know exactly what your cost is to produce, and then you can base the rest of your marketing plan off of that.
Very good. Todd Horwitz, as always, information hopefully helpful to whether buying or selling the commodity, whatever it might be. Well, we're talking livestock with him in 1 minute as we close things out. We'll be right back to Chicago with Todd Horwitz.